Ugode Obi Chuku is a retail investor and CEO at Nairametrics. He's also a member of the Nigeria Retail Investors Community. Ugo, it's good to have you here this morning.
Great to be here.
Thanks for coming through. Let's start with this. Let's start from the Wednesday's wind of rallies, as it was put by some people. So what's the mood on the NRI this morning, the Nigeria Retail Investors Community?
We are excited. I mean, like a few months ago, a lot of people left the stock market. So we those of us who've got skin in the game, we remained in there. we were actually what you call patriotic investors. We've been in there, held forth. And we're happy to see that the rally is back on. We've rode a wave of losses over the last 3 to 4 months. We've seen different cycles of bust, and now we're seeing a boom, and then we hope that this would sustain. But like I typically say, you'd have to be careful about the kind of the frenzy that is out there right now. There's still a lot of companies who are not healthy. There's still a lot of companies who are undervalued as well, but this is the time to be very careful. Like Warren Buffett, typically says, be greedy when others are fearful, and be fearful when others
the contrarian principle of investing. Again, but at least, was it fair that the big boys carry the younger ones, or the big caps carry the smaller caps along in yesterday's frenzy to say, hey, hold on a minute, this was a rally, let's all enjoy it together, at least for once. You don't get Christmas every day. It's only December 25th, as it were. So, was that really wrong? That was
it wasn't. I mean, I was looking at the data yesterday evening, and I saw that about 20 stocks did 10%, and I think about 68 stocks gained as against 3. So, and the market currently is dominated by the large cap. So there'll always be that tag along effect, which is what you're seeing now. And quite frankly, there's been a lot of small cap stocks who still have very good fundamentals. So I don't think it's bad for the market. It's also good. Every stock needs visibility right now.
Do you think this is a message of the market about the elections and politics, as it were?
Well, you see, you can't divulge politics from the market. And what people fail to understand is the stock market is usually, typically the bellwether, right? So they sort of forecast what will probably happen in the future. So if you notice in November, when we had that very first massacre, right, the stock market already anticipated, the drop in oil prices, the harsh rhetorics from politicians. So there was a lot of fear mongering, and then the market crashed. So now you've seen the bull back. So they already know that, okay, I mean, a lot of the political risk that was factored in when people were preparing their evaluations, it's out now. So people will have to remodel, and you notice that when you remodel, your political risk will drop a bit more. So if it drops a bit more, then your asset prices go up, right? So that's what's happening. So the political risk is still there down the road. Remember, we still have budget deficits down the road. We still have oil prices out there. There's still a lot of companies who are still not very healthy. The banking sector results weren't very impressive. The FMCGs were still very down. So, but then I think the fact that the political risk is out is very crucial for Nigeria. Remember, the rating agencies just a few weeks ago, negative watch. So we're hoping that very soon, we back on
the recalibrate those credit rating outlook. Again, let's get back to Nigeria retail investors. Of course, the news is all out there. We all know that international investors were the first to leave us, and they're the first to walk away. As it were. So, do you think this rally, this momentum, as it were, should be jumped upon by the retail investors in Nigeria and use this as an advantage moving forward?
Yeah, you see, I think the lesson to be learned here is, you need to, understand the difference between a market bubble and a market crash, right? So what we had in 2007, 8, 9, which, burnt a lot of people's fingers, were that we had an asset bubble, all right? So a lot of the prices, a lot of, the companies were overpriced, right? And everybody was coming in. But what we've seen in the last 3-4 months is we've just had more of market underpricing, basically. So you see a lot of stocks, good fundamentals, but they are being down priced, right? So what that means is that when you see things like that, try and understand, why is the market going down? Is it due to fundamentals? If it's not fundamentals, if it's something else, then there's probably an opportunity in there. Now, for those who don't get into the game, early enough, there's still a chance. There's still a lot of stocks that are undervalued, especially in the banking sector. And insurance sector is still there. They still have a lot of undervalued stocks in there. So all you need to do is that get in there, don't rush, take your time, cherry pick, make sure that the companies that you're picking have sound fundamentals, and you will still get some upside.
Looking at where we're coming from towards the final quarter of 2014 and in the first quarter, the first of the asset classes to get massively hit was the Naira. Do you think, looking back now, putting the first quarter behind us from 2014 Q4, did you think investors generally reacted or overreacted, as it were, on the stock market because they saw the Naira just going through a tailspin?
Yeah. Well, I wouldn't call that a overreaction. I mean, everybody has different emotional attachment to investing, and typically I and as most guys on the retail investor community tend to be quite emotionless. So all you try to do is look at just think through it very well. Right, and you notice that you just basically hedge your bet. Like, look, what really is the problem? The problem is if the politicians mess things up, right? So that's a downside. But what if they don't mess things up? Then that's an upside. So what happened is a lot of people got in there, they were scared, so they flew to safety, and people actually thought the country was probably going to go bust, so everybody was stashing up dollars. Some people started buying and it was 160, 170. So it was still good at the end of the day. People who bought then probably will still sell and still have some upside. But on the long run, I still feel it was better to not to have done that, and the more patriotic thing to have done was, to invest in our equities.
You're talking about fundamentals that drives equities, that drive bonds, that drive treasury bills and currency and what have you. From the fiscal, whatever external side, yes, we have quite a number of issues to deal with. Do you think moving forward after this honeymoon is over, as it were, we don't know how long this honeymoon will last? Rotimi Fakai just said earlier, as far as the stock market was concerned, we're at about 2% on the upside this morning. This time yesterday, we're about 4%, which means that, yes, everybody's trying to pack their bags, try to look forward to the Easter holiday, and I'm sure you're taking you're taking some pleasure of this weekend holiday. Coming back on Tuesday, and we're getting into the real business of the second quarter. We have May 29 on our hands. We have a budget that is outstanding. We'll have to put a new National Assembly in place by June. Now, all this put together, where do you see the market moving forward as well? This 7% one-day gain by the Naira on the dollar is not going to keep quiet and expect this pullback to continue this strongly. Where do you see some kind of moderation, reaching a plateau as it were, moving forward?
Well, what you have to understand is there's still a lot of political risk out there, and political uncertainty, and you also need to understand that foreign investors play a huge part in where the Naira goes to and where the equities market actually go to. So what they're going to be watching out for now is what will the president-elect say? What is APC going to say? What is going to be their mantra in terms of the economy, right? So they're going to be watching every single line, they're going to be interpreting every single line, they're going to be watching what their body language on TV, what is their economic plan, what do they intend to do as per the budget? Are they going to scuttle a lot of the transnational deals that's been in place? Is there going to be a U-turn on some of the landmark deals that the outgoing administration has done? They're going to be watching all these things. So it's very important that the president-elect and his team craft out a very good what I would call image laundering for the country. It's very important because the kind of message you put out there will determine how they price our assets, and it affects them as well. Already we are looking at a budget deficit, so it's very important for us to borrow at this time. So we don't want to borrow at 16, 17, 18% and have our children pay that. We want to borrow at lower yields, right? So it's very important that we have the right message out there. Okay, so as far as I'm concerned, what I think we need to do now is make sure that harsh rhetoric continues to go down. We need to see, foreign investors want to see a little bit of assertiveness. They want to see optimism. They want to see that the government is private sector inclined. They are business friendly. So these are the kind of messages that we need to see. So if you know their PR team, tell them that.